Do investors follow Warren Buffett's advice? You could say that. You could say, hey, I have gold data that says that investors don't follow Warren Buffett's advice. They should have been great buyers in 2013, but they weren't. So this kind of goes against that Warren Buffett advice, right? Right? People thought the world was ending. Let me buy some gold. People view gold as a safe asset, right? All right, let me look at some of the chat here. Market unsure or not predictable enough, so the investment would be low. But Rahul, Simon told us that 2013 there was a collapse in gold prices, right? There should have been buying, not selling. Casual economist, welcome. If the ETF is high, sales might be lower. Rahul says not necessarily. I agree, it's not necessarily, Leo, because remember, we're talking about two completely different audiences now. The jewelry items that we saw earlier, the fabricators, they're not buying for investment. They're buying because it's just cheap. And like I said, you know, if I'm a manufacturer, I know I'm going to use it. I don't plan on going out of business anytime soon, so let me buy 10-year supply. Right? That makes total sense, right? It's a hedge, right? Whereas the ETF is people like you and I. Just, you know, mostly individual investors. Again, I know institutions use it too, but it's mostly just individuals, right? So Mickey says, I think as well, consumers weren't as well versed in stocks, tend to invest in ETF more than individual stocks when they play into the panic. Maybe, Mickey. The thing is that there is that in this particular scenario, because you're right, some people might do that for some ETFs. But in this particular scenario, the gold ETFs only invest in gold. It's not like a technology ETF that might spread the money around, you know, 50 different companies.